Let's start with the yuan factor as it pertains to the Chinese airlines here, because these are companies who have a lot of US dollar exposure. Do you think that is a big reason for the share price performance of late?
Yes, definitely. The US dollar weak renminbi has been a big headwind for the Chinese carriers because aircraft capex is paid in US dollars. They have more US dollar costs than US dollar denominated revenue, and they book foreign exchange translation losses when the yuan weakens. Fortunately, they have been managing their risk in recent years. In the past, they used to have 80% of their debt in US dollars. Now they've pared down to close to about 30%. So the quantum is smaller compared to previously.
So the currency is one issue they currently have to contend with, but what's going on in the energy markets as well? We've been tracking a pickup in oil prices, sure, a little bit on the back foot today, but pretty much a sustained pickup considering where we were a year ago. Is this problematic for Chinese carriers? Because we look at what happens with US carriers, the European, many of them are hedging for volatility in oil prices.
Unfortunately, the Chinese carriers who were burnt in 2008, they have stopped hedging. And this is actually very negative for their fuel costs. They tend to pass on only half of the fuel price increase to their passengers. And therefore now the focus should not be on chasing market share. They should focus on raising their passenger yields as well as impose higher fuel surcharges to pass on some of that impact to customers.
Do you think customers are willing to take on higher fare prices here? I mean, can the Chinese airlines afford to do that, as you say, put more focus on profitability, or are they just going to be losing customers to the competition, even foreign carriers?
Interestingly, travel demand has been very strong this year, stronger than the historical trend, about 14% growth year to date. And so the Chinese carriers can have a bit more pricing power, and the domestic airfare reform is going to help them as well. Fortunately for the Chinese carriers, going forward, based on the aircraft orders, their fleet expansion is going to be more moderate. So they will be under less pressure going forward to try and discount heavily in order to fill their planes compared to what they have done previously.
When you talk about customer traffic patterns, what are you seeing when it comes to travel, outbound travel to the United States? Do you think that could start to decline as a result of the trade tensions we're seeing between the two countries?
Absolutely. The Chinese have historically used that as a very powerful tool. They've curbed tourism to South Korea, to Taiwan, and even to Japan whenever there were geopolitical tensions. And we expect them to do the same. It's a very effective psychological tool. And every year we have 3 million Chinese visiting the US and only 1 million from the US visiting China.
So you think that could be something coming soon as we await a response from Beijing on how they will answer Washington with this latest trade salvo?
Certainly.
Very interesting. We'll watch out for that one. I also want to ask you about what's happening with Air China. Interesting story there with one of the pilots having an e-cigarette on the plane. That, of course, forced some problems in flight there. They've now been punished with the fine and some changes to capacity here. Is this going to have long-lasting reputational damage for Air China? Because we are seeing the shares a bit on the back foot just today.
Unlikely. Yes, they're being punished. They'll have to cut capacity. That's going to impact about 1% of their business, but it's unlikely to be long-lasting in our view.
And just going back to the oil impact here, you mentioned that the Chinese carriers have not been hedging. Do you think now management is saying, oof, maybe we need to change that policy, and that's something that we should start practicing?
They definitely should try to manage the volatility. If you look at the forward curve, the oil futures have been quite volatile, and it is basic risk management. They should adopt what Singapore Airlines has done in the past, which is to hedge about close to at least 40 to 50% of their fuel consumption, at least on the international side of the business.
And just finally, Corrine, I want to ask you, because we were talking about this Farnborough Air Show that always tends to put the spotlight on the battle between Boeing and Airbus. Could this trade fight between the US and China be a big boon for Airbus orders in China?
Yes, we expect the Chinese carriers to order more Airbus planes at the expense of Boeing in the near term because of the trade spat. Historically, Boeing has had a market share lead in China. We have Air China, China Southern, Hainan Airlines operating more Boeing planes than Airbus planes. But that's going to change going forward because of the trade tensions.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.